for me.
This is an Evergreen Media Network studio production.
This is Martha Matters. From real estate, healthcare, current events, taxes, or just about any topic, we're talking about it. Call us with any questions on just about any subject. Now, here she is, Martha!
Well, hi there and welcome. Hey, this is an interesting time of the year. It's not exactly enjoyed by everyone, but some people they are, if they're getting a return or something. I want to show you some of the loopholes that I found out quite accidentally by doing my own return. Before I get into a Schedule E, I want to, for those of you that have any investments, you don't need to have a large amount. It can be a couple of mutual funds. It can be one or two or four or five specific stocks. But I had to delay my income tax return because just this past 3 days ago, I got another form on one of my stocks that has to be recorded. And I want you to know all research, not all, because it's not true of ExxonMobil or Chevron, but all many of the research stocks, like Cheniere that does oil drilling, like Kinder Morgan, which they go for copper and drill for different metals in addition to copper, and there are several others. Even though you buy it as a stock, it's actually called and is a limited partnership instead of a stockholder. So because it's a limited partnership where you own a little wee bit of the company, you have to fill out what's called a K-1 form in addition to the Schedule D. D as in David. And in my case, the Cheniere, 2 days ago, I got a form saying that they had done drilling and did not get any oil. So therefore, my portion had a loss of $480. That's fine. It would reduce the amount that I pay, but it has to be totally written into your tax return, and all the numbers get readjusted and recalculated on the computer. So that causes a delay. And I'm bringing that up. I think I saved like $108. You know, big deal. I would have rather sent in the one that was a little higher and get it out of my way. But I didn't, because anytime you get a form that's that involves serious readjustment of your numbers that go on Schedule D and also the K1 form, even though it's in your favor, all forms have to be documented on your return. If you go skipping some, it's only $80, forget it, that's their reason for auditing you. And that's the number one thing you don't want to do. Set yourself up to be audited. Even when something's in your personal favor, any formal form that you get from your brokerage or directly from the stock company that you're invested with, you've got to put all that information, good, bad, or even nonsense, put it all in your return so you don't get audited. So mine was delayed a couple of days because of that, and no big deal. But I made it my business. This late form that comes the third week in March is ridiculous, that you're supposed to have it by February 15th. And many people, it isn't as bad this year, but some years, especially during the pandemic, almost everybody that had stocks had to file for an extension because their income and dividend totals and all of that never came in the mail.
Yeah, I want to interrupt you for a second about that, Martha, too, because I thought it was like years ago they had to get those paperwork to you by the third week in January, which I'm with you. I didn't get most of my stuff till whenever, because I did my taxes maybe 2 weeks ago. The other thing is if you don't add those ones that you're talking about to your income tax return, they have already been sent to the government, hence
Yes.
why you're saying that you could set yourself up to be audited, because the government knows about it. Now they want to know why you're hiding it, if you will.
That's correct.
Okay.
That's 100% correct. And so that's why everything needs to be mentioned, as stupid as it is. And you can call it stupid the whole time you're writing it in, but write it in.
Yeah.
So, yes, that's absolutely true. And I wish, and they're not doing it, they're saying they're short-staffed. Well, the IRS is the receiver of these forms, that they're not the reason why these forms are late in being sent to you. So it's about time that someone federally gets to all these different stock companies and brokerage houses to, don't take it secondhand, make it your business to make sure these forms are sent out by the third week in January, or even the first 1 or 2 weeks in February.
Yeah,
Enough is enough. There's no excuse for this lateness, but they're not condemned for being late. We're the only ones, the taxpayer, being condemned if we're late with our return.
Right. That's why I thought there was a law that said they had to get that stuff to us by the third week or so.
There is, but it's not enforced.
Okay. All right.
Which is wrong.
Yeah, it is.
Also, speaking of that, for those of you who say, "Oh, I just have too much to do, I'm going to file an extension." You can file an extension and you don't get in trouble for it. But I've got to tell you up front, if you think you owe money as opposed to getting a return, do not file an extension unless you have to, because when you get that extension, it doesn't delay interest or anything else that you need to pay on being late. You are withheld. There are no criminal charges. They don't come after you by doing an extension. But as of the 15th of April and the very next day, you start being charged interest if you're late. So don't be late just because you're lazy on filling out your forms or don't feel you have all the information or time. But if you're going to owe a substantial amount of money, don't extend the payment of your return for a very long period, because their interest is high. If you think a mortgage interest is high, wait and see what this one is if you're very late by several months. If it's a week or two, it shouldn't matter. They may or may not forgive you for it, depending which reviewer goes over your return, but it won't amount to that much. But be aware of it. Any extension where you owe money, you're going to be charged interest from April 15th to when it's paid.
You know what? I want to add something to that too, Martha, because it happened to me a couple of years ago, and I think I'm remembering the right way what you're talking about, the interest rates and all of that you have to pay if you don't, file right away and you're late. Also, if you have to make payments to them, the interest rates on that are high. And the other thing is you have to sign all these things that say you have to agree to like pay this certain fee to be able to finance it. And it goes on. And I think when I got done with mine, I wound up paying like an extra $250 plus the interest.
Mm-hmm.
So, I mean, even if you wait and you don't have the money to pay it, and you have to make payments. It was
$250 in fees, you mean, for all the excess paperwork and stuff?
The paperwork and for the length of time that I decided I needed to pay that off and whatever. It was exorbitant, in my opinion.
It is exorbitant. Almost everybody says the same thing.
Yeah.
So even if you have to stay up late one night till midnight or after, please, it is worth it. Mm-hmm. And also related to that, when all your returns, if your return is mailed in and you owe money the very last minute, especially by paper mail and stuff, it will take them 2 or 3 weeks before they get around to opening it and processing it. So you're given like, I can't vouch for it, but you do have, after you mail it in, there's, especially if you mail it in on the 15th when all the post offices get loaded, you do have several days or I'll say a week. Somebody may be lucky into 2 weeks or 3 weeks, but don't count on that happening. You do have a delay before they even file for collection of what you owe. So if you don't have the money, let's say on April 15th, but by the 17th or 18th, you'd have the money in your checking account so that your check would be good. You can count on that much of a grace period, but don't count for 2-3 weeks, a month. Your check will probably bounce because it would be cashed by then. Mm-hmm. Now, the other area that you really can save, even if you only have one rental, and even if the rental is a family member, but remember, if it's a family member and it's not living with you, they're actually living in one of your properties or an apartment or something like that, you have to, even if it's a family member, you have to have a legal lease. Mm-hmm. And completely filled out and every page signed and initialed both by the renter and the landlord. You've got to be legal. If you have a lease, you fill out what's called a Schedule E of the 2023 return. And the Schedule E has so many deductions that your Schedule A used to have. If you remember several years ago, that got taken away, and it's now a Schedule 1. And in place of that, they give you higher personal deductions right off the bat. Mm-hmm. But the Schedule E, like, for example, if you have a safe deposit box, there's no Schedule A, you cannot put it on a Schedule 1. But if you have rental property, yes, that is an itemized deduction on Schedule E, along with if you have a mortgage on that property that you're renting, the interest is a deduction, the taxes are a deduction, the repairs, and even the mileage going back and forth to collect the rents is a deduction. Now, unlike other schedules where you have like a Schedule C or you have an office or something, that covering transportation is very specific and deliberate. It's not miles from your house, it's miles from your office and this and that. And you have to have very, very good documentation. But what I'm talking about in Schedule E, you're given, when you do your return, what the going rate per mile is a deduction, like 28 cents. I'm just making it up now. I should say 30 cents, make it easy on myself. The per mile. And let's say you're 30 miles away from your home to the rental property. You simply multiply that 30 cents times 28 miles, and you double it because it's round trip. It includes the amount back, and that is your automobile deduction on Schedule E. You don't need to do any more. You don't even need to say what car it is, how many miles a gallon you get, and all that heavy stuff. It doesn't count, no matter what car you have. You just take the mileage rate, multiply it by the number of miles, and double it, and that is your automobile deduction. You don't do repairs on the automobile. None of that is a deduction. That's all included in the per mile deduction you get, what the average maintenance is, brakes and what have you. So there's that which is a very nice deduction. Any legal fees, any management fees, supplies, appliances, all kinds of repairs, every one of them are a deduction from your rental income. It's a very, very nice setup. So we're going to tell you a few more things, but check the Schedule E if you do have rental property before you turn in your return. That's a nice deduction. So stay with us. We'll give you a few more tips, and hopefully you'll have a very good tax-paying experience, or better yet, get a return. I want to introduce you to our main sponsor, Highland Plaza, located on US 1 on the east side of the Highland Drive traffic light. We even have our own left-hand turn lane. One of the places in there, the first one on the north side, is Easy Stop, and you will be surprised what competitive and beautiful prices they have. You should give it a shot. Also, Tony's Hairstyling Salon is ideal for the entire family at all ages. He and his wife have run a salon there for years with a huge following. Also, we want to tell you about La Taberna Restaurant. It has the freshest Mexican food in town and a well-experienced chef. You will be most surprised not only by the food, but the reasonable prices. Also, I want to tell you about the nail salon. It's Luxury Nails. Let me tell you, they do everything, both for walk-in clients and appointments. Appointments are really appreciated, but they treat all clients professionally. Now, I want to repeat to you, this is located on US 1, just east of Highland Drive at the traffic light. It's a beautiful yellow building with a maroon awning. We look forward to seeing you there. Come on over.
Step into the heart of New York City's secrets at the Yankee Tavern, where every drink holds a story and every patron has a tale to tell. From the depths of conspiracy to the heights of comedy, experience a thriller like no other. Uncover the secrets lurking in the shadows of the Yankee Tavern. Yankee Tavern opens on the Waxlax stage at the beautiful Riverside Theater in Vero Beach on March 19th. But you don't have to wait. Get your best tickets now at the box office or riversidetheater.com.
At Sunshine Furniture, our 35,000 square foot showroom is filled with the largest selection of in-stock coastal furniture on the Treasure Coast. Dining and bedroom sets, occasional tables, sofas, sleeper sofas, love seats and chairs in all the latest styles and colors from Tommy Bahama, Lexington, Hooker, Riverside, Universal, Four Seasons, Braxton Color, and Capri. We're the outdoor furniture experts and have hundreds of styles of any patio furniture you need, including a gallery of Berlin Gardens and Bollywood. We specialize in fire pits, outdoor rugs, umbrellas, and replacement cushions. Sunshine Furniture, 1295 US 1 in the Publix Plaza, Vero Beach. Family owned and operated since 1991. Don't forget to visit our outlet store directly across the street, filled with lots of name brand closeouts and sale items. Visit our website at sunshinefurniturecasual.com.
Sunshine Furniture, the best in every way. Have a sunshine day. Sunshine.
Hello, this is Carol Jean Jordan, your tax collector here in Indian River County. All of our offices are scheduling appointments for in-office services, but you can get that little yellow sticker quicker by using our Express Lane. It's fast, convenient, and free when you pay with an e-check. Renew your registration on our website and select Pick Up at the Tax Collector's Office. Order before 3 p.m. and you can pick up your little yellow sticker on the same day. Order at irctax.com. That's irctax.com.
Well, hi there and welcome back. There are a few more things. I'm not going to spend a lot of time on them, but I do recommend that you go to somebody professional if you're depreciating like appliances or a roof or anything major that costs thousands of dollars, painting the whole house on the outside and inside, because some things can be repair expenses and some things have to be depreciated. Now, appliances have to be depreciated. That means instead of deducting the entire cost of an appliance, let's say $500, you get to deduct it over 5 years. And things like that. You get a deduction, but it's much smaller, not the whole bundle at once. Same with a roof, outdoor painting, major repairs, re-landscaping. So you really need to go to somebody professional on whether the amount, especially if it's $1,000, $1,500, if that can be a repair expense or it has to be depreciated. You don't want to make a mistake on that. That the IRS will pick up on. Now, also, if you have any questions, besides calling me, there are loads of professionals, and they will answer questions on the phone, and even AI will answer some of these questions on the phone. So don't be afraid to get help. Don't make a mess of your return. And I wish you all very, very good luck on doing your return. There's a small amount of time left, but it is absolutely amazing. Professional people will ask you questions and make sure that you include all deductions you are entitled to. So have a great April 15th. I hope many of you get returns, and those that are paying, don't pay more than you have to. Good luck. Have a good week.